Hello everybody, welcome back. If you've been keeping up with finance YouTube over the last probably 3 or 4 years, you would definitely know the company that I'm talking about today, which is VICI Properties. A couple of years ago, VICI Properties was one of the most beloved REITs by a lot of certain YouTubers and investors as well, but suddenly, for some sudden reason that I can't put my finger on, a lot of people are now dumping the stock. Today's video is going to be reaffirming my thesis long-term with VICI Properties and also explaining why recency bias is one of the biggest killers of long-term gains in the stock market. I'm going to also be sharing why I think most people are selling out of it right now and my plans with the company going forward. And guys, one day in the future, I promise we're going to have a fan meetup in Las Vegas. We're going to hit up all the VICI properties, maybe do some gambling and some other activities in Vegas. Alright, let's get on to the video though.
Hello, I like money.
On my live show, The Cashflow Kings, go subscribe. We also like to make the joke 5-year performance is the only thing that matters, because that's a lot of the rationale of a lot of certain investors these days, and more specifically the certain investors that are selling out of VICI properties right now. And I've been honest, I've said this on this channel, but I think if you're selling out of REITs right now, especially what's going on with interest rates, and trust me, we will get to that, it's literally, historically speaking, the last 10-15 years, probably the worst time to sell REITs. I don't really know if I can consider you a long-term investor if you're selling in and out of REITs right now. Anybody with a quarter of a brain would know that the reason that these REITs are falling right now is because of the interest rates and the environment that we're in. And I think as a long-term investor, it's a really good opportunity to load up on some of these companies and secure a really quality yield on cost. Once again, I think the only reason that can really justify selling out of some REITs right now would be opportunity costs. And right now, I don't even personally see a crazy opportunity where I would want to sell out of my Realty Income or even VICI. But I'm a big proponent if you're going to buy an asset, and more specifically a stock long-term, you're going to hold that long term unless something changes with your thesis. And nothing is changing with the actual business and thesis of my REIT companies right now. There's no doubt that eventually, over the long term, interest rates will recover. But right now, in a market where it seems like every single stock is going up except REITs and utilities because of interest rates, it's very easy to be discouraged and sell out of these companies during a low point in performance. Now, I think the thing that makes VICI actually special compared to some other real estate companies like Realty Income is the potential growth avenues ahead for it. If you've been keeping up with VICI Properties' actual businesses, intrinsically, their assets are growing right now. They're making new acquisitions, diversifying their portfolio of properties, and doing all the right things that you'd like to see from the company. Their CEO, Ed Pitoniak, which I'm a huge fan of personally, makes very good creative acquisitions that grow the business over the long term. What makes VICI different from a company like Realty Income maybe is its experiential-based real estate model. A few years ago, VICI owned a majority of the Las Vegas Strip, and that's undeniably some of the most demanded properties in the entire world. Vegas is the largest vacation destination in the United States right now, and it's not going anywhere. And the uptick, and especially new visitors and travelers to Vegas in the most recent years, is only more leverage for VICI to potentially raise their rents after the triple net leases are over. Now, they're locked in some pretty long-term contracts, so I wouldn't expect any rent increases anytime soon. But when it comes time, Vegas is going to be in a much different place, and VICI is going to have a lot of leverage to kind of wiggle up that price. VICI mainly invests in gaming facilities, hotels, resorts, and other places that you go for an experience. This isn't like 7-Eleven or something, or traditional retail, where it could possibly be going digital over the long term. People are going to continue gambling, definitely from experience, going to restaurants, and other things that can't be digitalized. I think that's one of the biggest advantages for VICI. That's why I think VICI has an advantage over a company that's also in my portfolio, Realty Income. See, with Realty Income, when I bought it like 3-4 years ago for the long term, put that in bold, I really didn't anticipate that the retail world that they really have a lot of their tenancy in would be going as digitalized as it has, and a lot of stores like that are closing. That's why I'm not as confident in Realty Income long term and their growth prospects as a company like VICI. Realty Income, I've just kind of realized at this point, for anybody that's curious, I'm going to be selling out of it when interest rates recover. I still think that they're an okay company, not the best, that's for sure, but there's no opportunity cost right now that would justify me selling out at a big loss at Realty Income right now. VICI also made a recent investment in Margaritaville, which is basically like a destination for all the travel baseball teams for 12U, and they're finding more irreplaceable properties really to invest in, and irreplaceable tenants that offer a really unique experience that is probably going to be very sustainable for the long term. By the way, we have an entire forum on the Discord of VICI Properties, all the new acquisitions they're making, discussion about it, so if you want to join that, the link is in the description. Right now, if you're buying VICI Properties, you're locking in a near 6% dividend yield. Now, here's the crazy part. They've continuously grown that dividend. 2 years ago, they grew at 8.3%, and last year they grew at a really nice 6.41%. Now, I don't know how sustainable that's going to be over the long term, but this quality dividend growth, combining that with the solid yield on cost you're getting right now, and the potential capital appreciation over the long term when interest rates eventually will recover, I think there's massive potential for VICI Properties, especially at this price point right now. Patience is one of the biggest things that a long-term investor can have, and right now I think if you're owning REITs, more specifically VICI as I discussed, I think if you're being patient right now, you're just collecting your dividend every month, quarter, year, whatever. I think if you're reinvesting it as well, especially at this time where they're going to be obviously discounted because of interest rates, I think long term you could get a really quality return. And they're set to increase that dividend in September again. If they do it over inflation once again, that's going to be absolutely giant. I'm really excited for the long term potential of VICI, and I want to hear what you guys think about it in the comments. VICI offers a really weird mix, especially for a REIT, of growth, yield, and quality in terms of the properties and how unique they are. So I want to hear what you guys think about VICI in the comment section. Yes, I think a few years ago maybe the stock was a little overhyped as a REIT, but I think right now a lot of people are dumping it. The recency bias is very real amongst the investing community. I think it offers a great long-term opportunity potentially. Thank you guys for watching. Smash like and subscribe, and of course do dividend stocks, not drugs. Have a good one.